Hi, hello friends. Welcome everyone to Invest in India's largest retail investors online conference. I'm Ashok Devanampriya, the CEO of Traders Gurukul and also the host for your today's program. It's a great pleasure to invite every one of you to the most influential stock investor conference of the year. I'm sure by the end of this session today, you will have extensive knowledge which can help you to make better decisions in your investing life. I would like to thank our media partner Money Control Pro, the largest financial portal in India with millions of daily readership on their website, and also our title sponsor Sher Khan, one of the leading stockbrokers in India with millions of investors as their customers. They offer online security brokerage, portfolio management services to institutions, large corporate houses, and individual investors. They serve customers across the country from almost 37 years since they started. The speaker for today is Mr. Vivek Mashrani from Bangalore. He's a mechanical engineer turned financial professional. He has been in the stock market investing for almost 12 years now. He did his MBA in capital markets from NMIMS Mumbai. He is an ex-HSBC and UBS. He's also an active member of Indian Association of Investment Professionals and he is a CFA charter holder. Has been a speaker in various investing forums. My friend Vivek, it's really a great pleasure to have you on board for the first time in Traders Gurukul event. I'm sure your session, Vivek Mashrani's investment philosophy, is going to empower us today with some amazing knowledge. On behalf of Traders Gurukul, Money Control Pro, Sher Khan, I extend my warm welcome to you into our program as a speaker. Go ahead, my friend. The stage is yours.
Thank you so much, Ashokji, and glad to be here helping fellow retail investors. And again, thanks to the sponsors who have made this event possible so that we can connect with wider audience. So just a brief about me, like I'm a founder of Technofunda Investing, and what I practice is like mostly blending technicals and fundamentals. And I think Ashokji also does a similar thing in his more like a trading kind of profile and as an investor. So today what I'll be discussing is a very simplified topic where it will help you to screen any company for long-term compounding very, very effectively and in a very simple format. So let me start and let's deep dive into this session. So as Ashokji said, I'm a mechanical engineer. So a lot of thoughts and, inspiration comes from my engineering background, right? So when I studied mechanical engineering, we had a lot of these machines where we used to learn about gears and how camshafts work and how different components of a machine works. And when I started my investing journey, I thought, is there any simplified way to do our stock screening? And that is where this the acronym of machine came in. Okay, so it's an acronym which will help you to simplify your entire investment process and the screening process. And this is again, you'll not find anywhere else. This is exclusively here you are seeing probably because this has been developed by me. You will not see anything closer to this anywhere outside on YouTube or any book or anywhere. So how I define machine? The machine is acronym starts from M, which is mega tailwinds and mega trends. A is price volume action and action from the management. C is competitive advantage modes. H is high ROC emerging quality. I is improvements in company. N is new, what company is getting into, what are the new things which company is venturing into. And then finally, E is execution in earnings growth triggers. And we'll go deeper into this and we'll take a lot of case studies. I'm also going to focus a lot more on Q&A. We'll probably go on till like 1.5 hours or so, but I'll stress more on Q&A so that you should be able to relate with all these concepts which we are discussing, and we can take a lot of live examples. We can open up financials, we can open up charts, and we can dissect this concept much deeper. So my idea for all of you is to give you as much as practical insights as possible, and your next 2 hours, I want to make it super useful and super memorable for all of you. Yeah. So take a lot of notes and write down what all things we discuss so that you can absorb it better. And later on, you can share the notes. You can also tag me on my Twitter handle if you want to. But just make sure that you take a lot of notes. Okay. So the first thing which we are discussing is mega trends, right? And think about this. Why mega trends are important? Why mega tailwinds are important? Think about a ship like this. If you are moving in the direction of the wind, it is very very easy to sail your ship. But if you are just going opposite, in the opposite direction of the wind, it is so difficult. And same with swimming. If you are swimming with the current, where which direction the water current is going, you'll be able to swim very easily. If there is a current flowing in the opposite direction, it is very very difficult. And same happens with companies and businesses also. Like if the business environment, if the sector tailwinds are in favor of any company, then that company and the sector will be highly profitable, and each and every company can make humongous profits. But if the sector is not conducive, if the overall scenario of doing business in that particular sector is not conducive, then you will face a lot of headwinds. And think about a recent scenario, right? We had COVID in March 2020 year. And if you see hotel industry, you see restaurants, almost nobody made money in those 1.5 years. Although they could have been best of the best hotels, there could be best of the best restaurants, but just because there was a headwind, there was a event that occurred which was going against that entire sector, barely anybody made money. And if you think about the opposite scenario, the online world, if you see companies like Google and Zoom and all those online companies, they flourished because they had sector tailwinds in place. So it is very important to align yourself with powerful force that is megatrend. And I get this question a lot of time, that Vivek, you are doing full-time investing, and you have studied this and MBA and CFA and all that. As a retail investor, I have not done so much. Can I invest? And I say, hell yes, you can definitely do it, because you don't need to know it all. You need to understand the big picture. If you are able to understand the pulse, that where directionally it is going, you can actually make a lot of money. And we'll take one small example of the sectors, how it turned out. And remember, these sectors always keep changing. Like every 5 to 10 years there'll be new sectors. And that is where I say buy and hold is fine, but you need to keep buying and holding until the mega trend is in place. If the mega trend goes away, then you need to also sell out. And this is like a perfect example, and the credit goes to Mr. Samit Vartak. I've sourced it also below, who shared this insight. Is if you see in 1998 to 2008, there was a lot of black money, and the economy was totally into different side. A lot of people were putting money into real estate and infrastructure. All those things were booming. The power sector was booming. So if you see the top performers of that decade from 1998 to 2008, they were like, Amtech Auto, Anant Raj, builder again, Ansal Properties, again building space, in HCC, Hindustan Construction Company, you had IVRCL, you had Jai Corp, you had Jain Irrigation, you had Kalptaru Power, you had Marketer, you had Motherson Sumi, NCC Limited, Patel Engineering. A lot of these company more on the industrial side, infra side, real estate side. And they created a lot of
Vivek,
wealth. And
a small request, Vivek. People are requesting to make your slideshow full.
It's actually full, but yeah, I'll just focus on the main screen in that case, so that it becomes slightly bigger.
Yeah,
But I'll need to switch between windows, but
yeah,
hopefully this is fine. Yeah,
no problem. Thank
because
you.
it's a MacBook, so it's difficult to remove that bottom bar. Yeah.
I realize that.
So basically, the idea is, now if you think about companies like Aban Offshore, Amtech Auto, Ansal Properties, Moser Bear, a lot of these companies are almost bankrupt, right? Even IVRCL, HCC, all these are like almost bankrupt. So you cannot like just buy and hold. You need to monitor the mega trends also. And that is why, having that big picture in mind, having that broader understanding of the macro is very, very important. And then if you come to 2008 to 2018, a lot of companies into pharma, a lot of companies into banking space, a lot of companies into some of the auto space, they created a lot of wealth. So if you see Aarti Industries, specialty chemicals also, Ajanta Pharma, Atul Limited, Avanti Feeds, Eicher Motors, these kind of companies made wealth. No real estate company in place, no infra company in place. So just by understanding these kind of broader thesis itself, it can change the trajectory of your investing returns. And I was beneficiary of this because one of the company which is listed second last by chance, Vinati Organics, I got a chance to invest in that company in 2010 at 50 rupees, and still I'm holding it as a disclaimer. And you can just see the kind of returns it has generated, right? Just one or two such companies can actually make you financially free. So that is on the mega trends and why it is important. Now let's do a practical case study, right? And see what are the underlying trends that form a bigger mega trend and how you can connect it with the sector. So how many of you realize that urbanization is a very, very powerful trend? Like every single year, people are migrating from villages to cities, to bigger cities, every year on year on year. And it has happened in the past, it will happen in the future for next many, many years together. And these are so powerful trends that no government, nobody can, disturb it. It will happen no matter what. The second trend, which all of you are witnessing right now, it is digitalization, right? All of you are sitting at home and watching it. I am like peacefully sitting at my home, just chilling out and sharing my knowledge with all of you. And pretty much we are doing a lot of these activities digitally now. So digitalization is another, the trend which is going on, which will keep on going on for long period of time. And same way in India, if you see, there is a trend from unorganized to organized. A lot of unorganized player are getting converted into organized player. Also, there is a trend of bigger families to nuclear families. Earlier we used to have like big family of 15, 20, 30 people in a family, and now you have micro nuclear families where you have two parents and one kid, two parents and two kids. So that is a trend which is going on, and the rise in per capita income because of this, because people are having lesser and lesser kids, they are having more disposable income. Also, the awareness on health and fitness is increasing day by day. The pollution is increasing day by day. The lifestyle changes are happening. We go out more frequent, we order more from Zomato, and that trend is changing. And the connectivity and the infrastructure is also improving day by day. Like if you see 20 years back, we did not have these kind of roads, this kind of infrastructure, these kind of flyovers, but day by day this is like increasing. So if you connect all these dots and then connect to a diagnostic sector, and this is just for FYI, just for example, nothing like a recommendation, but if you see diagnostic sector, can you connect the dots and can you think about the diagnostic sector is a beneficiary of all these underlying mega trends that is going on? So this is how you basically build upon a thesis that, okay, if there are so many underlying trends which are so powerful and it can go on for long period of time, and if there is any sector which is beneficiary of that, that sector can also keep on growing for long period of time. And of course there will be short term ups and downs and all those things, but we are talking about a structural trend for long period of time. Okay, so this is like M, which is standing for mega trends. And I practically find it out in my template. So I have an Excel template. I'll share this in some time, but let's just focus on how to go about it. So this is like a template of Vinati Organics. And what I generally like to see, I'll just zoom it a bit so that all of you can see this much better. So what I do is I see the growth trends. So if you see these three columns, it is a 9-year growth trend, 5-year growth trend, and 3-year growth trend. And if you see EBITDA, the growth for 9 years is compounding at like 16%. If you see the sales growth, it is compounding at 9%. And if you see the ultimate profit growth, it is compounding at 19%. Last 3 years, it is compounded at 23%. So if any company in a particular sector, it is compounding more than 15% and with a high quality, we'll come to high quality later. But just remember this, anything which can keep compounding more than 15 to 20% with a good return ratios, that is highly likely to create tremendous amount of wealth for you. And if you see the kind of returns this company has generated, the CAGR return around 48% CAGR returns it has generated. So every year this company has compounded, almost like 48%. Like that is what I said. Like even when I invested, this was like 50 rupees, and right now it is somewhere around 2000 rupees after some split and all that. Yeah, so that is the power of compounding when you understand the big picture and ride these kind of mega trends. Okay, and we'll keep on referring to this template again and again, but this is what you see, and this is the link to download. If you want to just download the Excel, you can just go here and you can download it. It's just complimentary as a token of gesture because you are here live with me. So you can go to technofunda.co/excel and you can download. Alternatively, you can go to my Twitter handle, Mashrani Vivek, and on my bio there is a link. You can also check it out there if you are not able to download from here. Okay, so you can actually download and you can work upon side by side along with me. Okay, so that is what I would appreciate, so that you can do. And this is like just a quick slide on the title sponsors, who are Sher Khan. And let's now go deeper into how investing returns are generated. Okay, so what I'm trying to do is going to first principles and trying to get back to the bottom of the entire investing returns. What exactly makes investing returns? So if you see on the slide, there is this particular equation which says exit price divided by entry price. So it is very, very simple. I'll just do a pointer so that you guys can see. So it is like exit price divided by entry price. What is exit price divided by entry price? So it is like price at which you bought, like say 100 rupees, and you sold at 1000 rupees. So you have basically generated 1000% return. So it's just 1000 divided by 100 and 10x returns you have generated. Now, what are the components of exit price and entry price? So if you put this into an equation like E into P into E, right? So P by E. So price to earnings ratio into earnings, that is price, right? E and E gets cancelled, numerator, denominator, very simple mathematics. So I'm just adding E on the numerator and denominator just to simplify and break it down further for all of you. So the first component is earnings, right? So what is the earnings at entry? Like you are entering at 50 rupees. When you bought, the earnings per share was 50 rupees, and when you sold, it was say 100 rupees. The earnings doubled by the time you holded that investment. So the 2x return came from your earnings growth itself. And then your PE was suppose 10 times and it became 50 times. So 5x return came from your PE re-rating. So total you got 2x into 5x, that is 10x return. And that is the reason you cannot just depend on fundamentals. You need to understand both. Why you need to understand both? Because this business performance is driven by fundamental analysis. Like if you want to understand how earnings are compounding, how earnings are growing, you need to understand fundamental analysis, like what we showed in the Excel. But if you want to understand P re-rating, no fundamental analysis book will tell you. I've gone through more than 60 books in my CFA curriculum, and there is nowhere it says how the P re-rating exactly happens. That is where you need to understand technical analysis, market sentiments, price volume action. So if you understand one part of fundamentals but don't understand technicals, or you understand technicals but don't understand fundamental, you are actually just looking at the half picture of your investing returns. So that is the reason, why I blend both technicals and fundamentals, because it is integral.